Welcome to the Voice of MPE. In this MPE Talk series, we bring you fresh insights from top industry leaders and payment professionals. I'm your host, Francesco Burelli, a partner at Arkwright Consulting, and with me I have Panagiotis Kriaris, Head of Corporate and Business Development at Unzer, and also a distinguished member of the advisory panel and an ambassador for MPE. The topic for this talk is tokenization and trust. I will start with asking what is tokenization, Panagiotis?
Thank you, Francesco, first of all, for having me. Thanks for a very interesting topic. So let me jump straight into the topic. So actually, tokenization is the process of representing a real financial asset as a digital token. It can be on a blockchain most of the time. So it's basically replacing sensitive data with a non-sensitive substitute. And I would say the best way to think about it is if you think of our hotel key, most of the times lately we tend to receive a card that is opening only our hotel room. And imagine that you can have the card versus the master physical key. So the master physical key basically opens everything, and the card is opening only the hotel room. So the key idea is exactly this. That's the analogy. You use the token to transact, but you cannot abuse the token outside its intended context. So basically, the card doesn't open anything else. So that's the key message about tokenization.
Why tokenization now?
I mean, if you look at the past 3 to 5 years, I would say tokenization existed, but it was mostly limited to cards, mainly seen as a compliance exercise connected, for example, to PCI in terms of scope. The consumer awareness was, I would say, limited. And also on the business side, there was limited application as well. Now, what we have seen happening over the past few years and lately is that we see fraud shifting from cards to accounts and identities. And card numbers are not the main target alone. So, for example, you have fraud focusing on store credentials, account takeovers, sessions hijacking. So it's basically, so tokens are a means to limit the risk on the fraud side. The second one that I would say is key is about the experiences. So the digital experiences, they have become kind of continuous. So we have this, so users are expecting this one-click checkout, the store payment methods, the cross-device journeys. So, and the flow basically should not be interrupted. So I would say that tokens enable this kind of experience and the continuity. And then, of course, we have regulation. So if you look at the likes of GDPR, with data minimization, if you look at PSD2 with the strong customer authentication. So there is a clear, I would say, guideline from regulators so that we don't store sensitive data unless it is absolutely necessary. And I think here is tokenization fits very well because it becomes kind of a design pattern. And of course, and I'm sure we're going to be discussing this today as well, you have AI. And AI needs cleaner data, safer data. So basically, tokens enable this pattern recognition without exposing sensitive values. So in a nutshell, I would say these are the key reasons for the emergence of tokenization.
Yeah, and thank you very much indeed. And you touch on various points that addressed what I was thinking of asking next. So what happened over the last 3 to 5 years? So you touch on regulation, on the adoption, and so on. And we have pervasive use of tokenization in specific sectors and subsectors that are making it a proven technology that is now looked at as a solution to particular challenges. And you mentioned privacy and security. Now, which tokens where? Do you have a view on user cases that are prevailing?
Exactly. I think the use cases are the ones that make us understand better about the added value of tokenization, and I have two in mind, very specific ones. So the first one is what actually schemes have been doing lately, and this is the so-called click to pay. And click to pay is so the main enabler for click to pay is tokenization. So the best way to think about it is the following. So wallets today are everywhere. Now, what kind of benefits do they have? They don't have a data card entry. They have a user and device recognition. Authentication is built in, and the checkout experience is very consistent. Now, the problem for cards is that they cannot compete with wallets if they only stay at the PAN level. So basically, click to pay is a way for schemes to compete with wallets on the experience side. So the tokenization makes the store card safe, recognition possible, and it removes basically friction. So I would say it's a scheme-led online checkout experience that lets consumers pay online without manually entering the card details because of the tokens. So you have basically a button and a flow across merchants and across browsers, and it works on the web as well. So it's not a closed wallet like Apple Pay. So this is the main reason why the schemes are trying to compete on the tokenization side. Basically, tokens becoming an enabler. So that I would say is use case number one in very simple terms. The second one that has been basically announced yesterday, and it's a very interesting one, is the following. So you have banks lately, and JP Morgan was the last one, betting on tokenization to modernize their cash offerings. And we have, let's say, the so-called money market funds, right? So what are the money market funds? These are basically one of the most safest and convenient investment products in finance. So they basically, what they do is that they invest in long-term, in short-term government debt and high-quality instruments to park cash. So it's kind of a cash management tool. Now, with tokenization, what you get is that you don't change the product, but you change the infrastructure below, the settlement piece, meaning that you do... so the problem that they are addressing, that they are running on traditional banking systems. So the ownership is updated only at the end of the day, and settlement takes time. Now, tokenization doesn't change the product, but it changes how it's run. So basically, you have funds recorded as a digital token on a blockchain, and this is changing everything. So, for example, JP Morgan is using Ethereum. So, in a nutshell, banks are addressing one of the main problems they have, which is that their systems are not built for the real-time economy, and now they're fixing one of the biggest constraints, which is this slow batch-based settlement. So it's a very interesting game to look at, I would say, and it's a prime example of how tokenization can really benefit and change instruments that we are using today.
Very interesting. Thank you. What about AI? AI and tokenization. Are tokenization potentially guardrails, compliance, way of achieving compliance within an AI context? How do you see it?
I mean, the interesting thing about AI is that it's not, so let's say AI does not do any judgment, right? So AI is basically answering, okay, how confident are we that something is legitimate? And if we have friction, basically AI is removing the friction. Now, so you have AI looking at the device behavior, transaction patterns if it comes to fraud, velocity, historical user behavior, etc., etc. So in terms of tokenization now, combined with AI, I think we have less sensitive data exposure, you have clearer data sets, and you have easier compliance. So I would say that in a sense, all the things that we get via tokenization are the main enablers for AI to be able to function properly. We always say that AI is as good as the data that we have, and tokenization is basically allowing for these data sets to be cleaner and to be easier in terms of compliance, right? So I would say the best way to put it is that in terms of tokenization, is that the AI it doesn't tell us who should we trust, but it tells us how much we trust something, right, based on the outcome of tokenization. So I would say for me, AI is a big enabler, and because of the discussion that is happening lately, because of the fact that everyone is focusing on the use cases of AI, especially in the segments that we have discussed, tokenization is basically becoming a big enabler in terms of the future.
Thank you. What's next? How do you see the future developing?
Actually, that's a good question. I don't think there is a simple kind of shift in terms of what's happening next. I think what we are going to see is that we are going to see, let's say, the use of tokenization becoming more kind of mainstream, because today, as we said before, it's kind of limited to very specific use cases. And I think now what you do have is that you have players realizing that this is a true potential. I mentioned the example of the schemes, and this is not something that they do now. It's something that they have been they have launched a few years ago. You see the big banks, I mentioned JP Morgan, employing this as a means to become competitive. So I think this is a real trend that we are going to see, right? Now, I would say this is the first one, and I would say that tokenization is probably becoming embedded in the economy as a whole. I think we're going to have. We are not very far away from a future whereby tokens and digital tokens are going to be the only, or let's say the main way to recognize someone, instead of the IBANs, instead of the PAN numbers, instead of all of these instruments that we used to have in the past. And it's basically, going back to my initial point, I would say it's basically an enabler for the real-time economy, and it's an enabler for the AI economy. So if you take into account all of the things happening today, if you look at all the trends, tokenization is basically sitting in the middle. I will add into the picture the digital identity, right? The rise of wallets, AI, blockchain, stable coins, etc., etc. So I would say tokenization is probably sitting in the middle, being this enabler layer below lots of these developments, and sometimes also connecting some of them with each other. So that's what I would say. So these are the next steps that I see in a nutshell. So tokenization is becoming much more widespread in general across all of these things.
Absolutely. We see it becoming more and more pervasive across a variety of domains. Well, thank you very much indeed for sharing your views. Thank you for listening to this MPE Talks episode. This is part of the MPE 2026 conference that will happen in March 17th to 19th in Berlin next year. Looking forward to seeing you there.
Thanks for having me. Thank you.